Welcome back to the YouTube channel. My name is Emmanuel. Let's get right into the video. So today we are speaking about the stock market, and this is a different asset class. I always talk about Bitcoin and all the other things regarding crypto. So if you want to understand what the crypto market is about and how I use that to get the peak of Bitcoin October 2025 till now, you can click this playlist to understand the entire crypto market with regards to the charts. So this is about the stock market and some specific companies which I would like to talk about. But before we enter the chart, we need to understand the terminologies when it comes to the stock market. So first of all, what is the stock market? So the stock market is made up of two words, stock and market. So what is a stock? A stock is basically a piece of ownership of a company. In simple terms, as you can see me here, this entire human being is the company. So this entire human being is the company, and if I'm to share part of the entire human being, so this my huge palm becomes a stock. You get it? So this part of the entire company becomes a stock, and you hear the people say stock and share. You must know the difference. The share has to do with the units of the stock. So this is a stock. So this is one, this is two. So these are two shares of stock. So stock just shows ownership, but the share has to do with the units. How many are you purchasing, or how many do you own? So that's the difference between a share and a stock. So if you take my nose, you take my two fingers, so 1, 2, and a nose are 3 shares of the entire company. But this 3 shows you have a stock, or you own parts of the entire company. So this is a stock. Then market. Market is basically where buyers and sellers meet. So combining the two, stock and market, where buyers and sellers meet, what are they trying to buy or sell? They are trying to buy or sell a stock. So stock market is basically where buyers and sellers buy or sell stocks, in simple terms. So now we know what a stock is, we know what a stock market is, we know what a share is, right? Before you make investments, before you make some decisions to invest in people, I want to use this analogy as well to make you understand this in real time before we enter the charts. Assuming this Emmanuel you see over here is a 5-month-year-old baby, right? A 5-month-year-old baby, and you've seen I've been able to grow from 0 to 5 months, and you invest in me. So investing in me is you give capital to my mom, and my mom gives me food. As I grow, then you get ownership of this, my palm. So as a 5-month-year-old baby, I have a little palm at 5 months. You give me the money. The money is made for food for this entire company or this human being at 5 months. As the human being grows, the palm begins to get bigger. So this is basically how the stock market works. So you are investing in this palm, you are investing in this entire company or entire body, right, to get parts of it. So you are getting the palm. As this body is growing, the palm is growing. You basically believe in the growth of the entire company so that your investment of your palm will also grow. I'm using this as an example because this is what you can visually see as at now. So obviously people make different decisions before they invest in somebody. So you can look at a human being and say this owner of the company is good, so you invest in the company because based on the owner. Some invest because of the accounting books, profit and loss, and all those accounting this, and some also look at the price of £1. So the price of a share. How has it performed at the past? Is it going to perform like that in the future? That is what I look at on the charts. So I personally just look at the price of the share. So £1 with regards to the company. Once the price has done this in the past, is likely to do this in the future. What am I talking about? So using me as an example again, as a 30-year-old man, so let's begin from 10 years. So as at 10 years, I ride a bicycle at 10 years and I get hit at 15. At 17, drive a car, get drunk, and have a slit on my neck. 25, go and for drag racing and enter the hospital. As at 30, if I'm going to enter a plane to say I'm going to drive, are you going to invest in this person based on the past experiences when it comes to the bicycle, to the car, to drag racing? Will you believe in me when I take an airplane to try to fly the plane with no experience? No. So this is what we do on the charts. We look at the past experience, see what occurs, and we make decisions based on the past experience from the present to the future. Similar example, if you see someone with a bicycle, the person heads on the bike at 15 years, the person gets up, next time wears a helmet, gets a car, instead of a left turn, takes a right turn, makes a mistake, gets forward. This kind of person, you invest in this person because with all the downturns in the person's life, the person learns correct. So based on the past, you invest in that person or in that company. That is basically what I'm doing at the chart over here. So we look at the past data of price. So how much this cost, what happened during COVID, everybody's shut down. So what happened with you, this company, what happened at COVID, what happened 2008 crash, what happened at this point, what happened at this point, were you able to overcome, did you die forever and not come up, and if you did. So we are just basically looking at past data. Once you see what happened at past data, it gives us kind of an idea to who this company is or how strong this company is. Then we make decision today for the future. This is basically what I'm doing over here. So we'll go to the screen, then we'll look at each individual company. So these companies here, using my analogy, are the different human beings, what they've gone through in the past, and we are looking at what their past look like for each company. Then we make decisions on the present to the future. This is basically it. So let's enter the chart. Obviously, what happens in the past cannot predict what is going to happen in the future, but it just gives an idea of what this company is or who this person is based on the past. Obviously, people can change from today to the next. That's the way companies too can just decide. The share price or whatever can just decide to change irrespective of what happened previously. So that is the risk we are taking. First of all, my bias, I'm bullish. When I say bullish, I mean I expect prices to move higher from today onwards. So that's what it means. If I say I'm bearish, I mean I'm expecting prices to move lower. So on the entire stock market, I'm bullish in the long term. Obviously, there'll be some downturns, but I'm bullish on the long term when it comes to the stock market. So before I talk about each specific companies or each share prices, I would like to talk about a disclaimer first before we go to the good news. When we are looking at the stock market, first of all, there's something we call recessions. So what is a recession? A recession is where a country's economy begins to weaken. A country's economy begins to weaken. And with respect to the stock market and the share prices, once we are in a recession, most of the share prices begin to fall. So once we have a recession, we begin to fall. So we need to know if we are about to have a recession or we are in a recession. So because that is going to invalidate our bias of being bullish. And I said being bullish means I'm expecting price to go high. So if there's a recession, price is going to go down, which might invalidate my bias. So this chart is very simple. So to look for this chart, you type T10, then you go and write YT, then you look at it over here, Y. So 10-year treasury yield against the 2-year. This is the chart that you get. This is a 10-year treasury constant maturity minus 2-year treasury constant maturity. You don't really need to understand the economics of this, but this is the chart. And looking at this, when I talked about the recession, so we can't pinpoint when exactly a recession will happen, but once a recession happens, most stocks are going to drop. So we need to have an idea of is it close or near. As of now, I'm still working at the timing to get the exact months or years to which recession happens, but this is the data I have for now. As you can see, this blue line, and we can see this red line, we see this green line. Simple term, the red line here is 0. So as this blue line hits 0 and below, coming months or years later, we have a recession every time. So we hit this red line below, and you can see I've put FFI, so fight for inflation. Then the next time we had FFI, fight for inflation. We came up, we came down below about, look at them down here, you can see the years. We hit this and came below in 1988. Months later, we have a savings and loans crisis. Years later, we came to hit this, came below. Years later, or months later, we had a dot-com bust. So Yahoo, Amazon, they were usually affected in 2000. Then we came to hit this, came below zero as well. Some months to years later, the Great Depression happened, which affected the banks and other major asset classes. This was 2008. Recently, we came to hit this zero 2009. Then months later, the COVID-19 happened in 2020. After that, we have hit this in 2022. So we should expect some recession to happen in the coming of months or years, but we don't know exactly. So it might be today, it might be tomorrow, but we are expecting something of a downturn to happen in the coming of months to years. But you can't just sit down and wait. We just follow the trend. If it happens, fine. If it doesn't happen, but this alone shows that there is something at the corner creeping, but we don't know when. It might be 5 years time. It might be next week. So this should just be at the back of our minds, not to be too bullish or to not be too happy that our share prices are going very high, because the recession has not yet played out for this time when we came to hit here to the downside. Just like prior recessions, we hit this mark, we come down, share price fall. We hit this, recession happened, share price fall. We hit this, recession happened, share price fall. Up to COVID till now, we have hit this. The share price has not yet fallen since 2022, and it's been about 4 years now. So this might be the year where the recession might happen, or next year or next 2 years. But I'm just saying this so that you keep this at the back of your mind, to not be too bullish or to not be carried away by our own analysis. The first company I'm going to talk about, or the share price analysis I'm going to talk about, is Disney. So we'll go to Disney. So this is the regular chart for Disney. As you can see, we come to the log, we click this L, and we have a log chart. So zooming out, this is a monthly chart. As I already said, we look at the prior, how has it behaved, and we see if this is looking good or this is looking bad based on past performance. So this is the Disney chart from its inception. You can see this began in 1968. So the beginning here is 1968 to where we are now, 2026. So from 2026, all this going back is the history of Disney. So we look at the entire history to see how it is in the grand scheme of things to make a decision today. So looking at Disney, just like my Bitcoin analysis, you can see this vertical lines. So this vertical line here is a peak. So the peak is red, the bottom is green. So once you see this peak is red, we see this peak over here is red, we see this peak is red. Very simple. We go to the green, we see this bottom is green, we see this bottom is green, see this bottom is green. So we now know what the vertical lines mean on this chart. We now know what the green and red lines mean on this chart. We now move to this yellow line. This yellow line also marks a bottom after our initial bottom. What does this mean? So this initial bottom green, we have a secondary bottom orange. This initial bottom green, we have a secondary bottom orange. This initial orange green, we should expect, we are dealing with probabilities, we should expect at least a secondary bottom orange, which might occur. Is it orange? Is this orange or is it yellow? Whether orange or yellow, you understand what I'm trying to say. So this as well, we are looking at the timing. So based on the past, we see what has happened in the past. From the peak to the bottom, from Bitcoin, you know what a bear cycle is. So a bear cycle is basically a season of falling prices. So from peak to bottom, that's what I consider a bear cycle. So from this peak to this bottom here, I consider a bear cycle. So this peak to this bottom, bear cycle. This peak to this bottom, bear cycle. This peak to this bottom, considered a bear cycle. And the opposite to bull cycle is where a season of bullish momentum from down to top. That's what I consider a bull cycle. So this as well, looking at the bottom to the peak. So from this green to this entire peak is a bull cycle. You can also look at it from the secondary bottom to this red is also a bull cycle. Similar thing from this bottom to this peak is considered a bull cycle from this secondary bottom to this peak is also considered a bull cycle. So we now know what this means just looking at the vertical lines, and now looking at the timing. This bear cycle, first bear cycle, is about 2 years. This is the monthly chart. So once you look here, this is about 23 months. So 23 bars, 1 bar equals 1 month. So 23 bars means 23 months, which is about 2 years, exactly 1 year 11 months. So this is about 2 years of a bear cycle. Next bear cycle is also about 2 years, a little over 2 years. This bear cycle too is also 2 years. So looking at the past, we've had 3, not even 2, we have 3 consecutive bull years, which are about 2 years. So looking at this, we've had this 2 years, about 2 years, this also about 2 years, this about 2 years. What again can we see? We see from this major bottom 115 months later, right? So from the bottom to 115 months later, we had our secondary bottom. Let's see if that's true for the next cycle. So we go to the next cycle from this bottom to this secondary bottom. We come here, this is the calculation here, it's 110. We now go to the yearly 110 months and 115 months. What does that mean in years? It basically means about 10 years. So from the bottom to the next secondary bottom is about 10 years. So this bottom 10 years later will have a secondary bottom to the upside. This as well, from the bottom 10 years later, from this bottom to the next leg higher. Going back to the monthly, this is simple to the eye, just looking at the timing. So to recap, we have our bear cycles 2 years, bear cycle 2 years, bear cycle 2 years. After that 2 years, on the 9th to 10th year, we bottom, then we have another bullish cycle. So after the 2 years, 9th to 10th year, we bottom, we have another cycle. This has happened 3 times. So since this has always occurred, we can bet on this that this might likely occur. Obviously, this might just decide to change, but that's the risk we are willing to take. So this is just looking very straightforward. And as I already said with the recession can occur at any point in time, then make this have a sharp turn in the meantime before we then head higher. So just looking at the cycles and the timing, we see this 2 year, this 2 year, this 2 year. Once we end, so we ended the 2 year, we had a little bullish cycle. From this ending of the 2 year, we had a little bullish cycle. Now, this 2 year ended in November 2023. So from this 2 year, we are going to have a little bull cycle into the next leg down, which is going to be about 2033, which is a far time from now. So just looking at this, the chart is not giving any reason to why this might fall. It's just giving more reasons for why we are about to head higher. Just from the bottom to this bottom to this bottom, we are likely to head higher. Putting the times and the lines aside, look at the trend line. What is the trend line? This black line we see over here. We can see it touched here in 1974. We came to touch this trend line in 1984. We came back to touch this in 2009. At the end of the 2008 recession, we came to store over here and we went high. We came to touch here in 2023, which is marked our bottom. We are heading higher. As at now, we've still come to bounce. We still come to bounce off this multiple times, about 1, 2, 3, 4 in this season alone. So looking at the line alone, the trend line also shows this is likely going higher. Unless this breaks, it's not giving any reason why this wants to head lower. So the line shows we touch the line, we head higher, touch this line, we head higher, touch this line, we head higher. We also touch this line severally, we are heading higher. So what is preventing this from heading higher is also this trend line we see over here. This trend line touch here, it came lower, touch here, we came lower, came to touch here, we came lower. So one touches here and we are heading higher, and one is on top, which is bringing it lower. So which trend line is going to win? basically. So which one wins? We just look at what is going to win. But personally, I'm favoring that we head higher. So it means we should break this trend line higher. Then it means we are going to all-time highs for Disney. This is basically looking at the trend line, looking at the timing, looking at the cycles. Everything is looking bullish. With Disney, the opportunity is still there. I'll just wait and see, but I'm favoring the upside based on the past performance. I believe the share price of Disney is going to go higher. Let's look at Amazon. Amazon is out already. This as well, looking similar. We touch here, we went high, touch here, went high. We came to touch here in 2023 as well, just like that of Disney. And the timing for this as well, you can see, I've gone back to the yearly chart. We can see this bottom occurred 7 years later. We came here 2008. 7 years later, we came to 2015. 7 years later, we came to store in 2022. So as you can see, every 7 years, we've been bottoming on Amazon. This alone should give us hints or makes probability more on our side that we are going to bottom in 2029. This is very simple. If it doesn't, we've taken our risk and we're out. Looking at this from 2001, 7 years later, 2008, 7 years later, 2015, 7 years later, 2022. So assuming you know this cycle, you'll be able to get this. As of now, I would say this is gone for now. But Disney is yet to go up. So that's why I like to talk about Disney. And also I can touch a little bit on Netflix. Netflix has also gone. Netflix too, also 10-year cycle from this inception 2002. 10-year cycle from this bottom, 10 years later, we have this bottom, 10 years later, we have this bottom. So the next bottom 10 years will be 2032. We've already missed this as well. If you look down, we come down to the weekly. We see the trend lines to it. Respects this trend line. We came to this trend line, we went higher, came to touch here, we went higher, came to touch here, we went higher. We are right now looking down, probably coming down to touch this to maybe head higher, or a recession might put this. It's all about probabilities. But what we can see now is we've had a 10-year cycle which is happening on Netflix. We can look at Coca-Cola. So Coca-Cola as well. Let's go to the yearly. Once you go to the yearly, we see from this bottom to next bottom 14 years. From this bottom to this bottom. So this bottom 14 years. From this bottom to this bottom took about 15 years. This bottom to this bottom 14 years as well. So extrapolating that, so once you look at the past data, it's likely we have a 14 to 15 year bottom, which will put us at 2036, which is a far time from now. We can also look at Adobe. Let's look at Adobe as well, or Adobe. So we're looking at Adobe. So we already know our vertical green lines are bottom zones. So this is a bottom zone. This is a bottom zone. This is the next bottom zone. This as well. This is a bottom zone. This is a bottom zone. So looking at this chart, you can see from this bottom to this bottom took 4 years. Next bottom took 7 years. So we are trying to see if this will happen again. So we can see this bottom to this bottom to 4 years. We are going to have a bottom on Adobe in 2026. Aside looking at the timing, let's go down to the monthly chart. Aside looking at the timing, we can look at this trend line as well. Looking at this trend line, we came to hit here, went higher, hit here, went higher, hit here, went higher, multiple times. And we are heading lower into this trend line. So what is likely going to happen? Once we hit this trend line and we are looking bullish, meaning we have blue candles and we are looking like we are going higher, this is going to be a strong, significant zone. We don't necessarily have to hit this trend line, but this is looking like a turning zone. So once we have a turning formation, it gives more probabilities that we are going to all-time highs, or at least $700, which is about this line. So this is basically it. We will look at the grand scheme of things, go to the back, what occurred. Is it likely occurring now? If yes, fine. If no, you go against it. Very simple. So this as well, I'm bullish, but now it's not yet ready. It's still bearish, so it's still looking like it's going down. We wait and see what occurs. We don't anticipate and try to predict. You make your analysis, see what occurs. If it's going in your favor, then you enter. So that's for Adobe. So Adobe are waiting. I wanted to talk about United Health as well, but this has already gone into my favor, so I'm not going to talk much about this. But with United Health as well, let's go to the yearly. I know I'm talking about several companies, but this alone should show you there are plenty opportunities which are also in the stock market aside crypto and the forex markets. So this as well, looking at the yearly, we know our bottoms are green, and look at the cycle. So from this bottom to this bottom took us 11 years. The next bottom took us 10 years. Next bottom took us 11 years. So looking at this, 11, 10, 11. The next one might likely be 10 or also 11. So between 10 and 11 might be our likely bottom. So within that, using that as our baseline, the next bottom, if it's 10 years, will bottom in 2029. If it's going to be 11 years, will bottom 2030. This was something I entered already, so I don't want to really talk too much about this. But this as well, using the cycles, using the trend lines, we can now go back to the monthly. We know our bottom having 10 to 11 years. So this as well, 10, 10, 11, 10. We know we are heading higher. So any form of we coming down to bottom, we enter for the next leg. That is how I approach the stock market. So similar thing. So I knew we are basically bullish in the long run. Once we have a fall and we are bottoming, looking like we want to go higher, then you can capitalize on that for the next leg up. This is basically an example I'm talking about. So you can see this trend line held, this trend line held. This hasn't yet touched this trend line. It might want to come and touch this trend line as well. But we can see the reason why this might not head higher is this counter trend line. Counter trend line means it goes against the trend. Yeah, so this counter trend line is what made this fall, also came to make this fall. So likely with my hits here and make this fall, if it should break this counter trend line, it means it doesn't want to continue falling and is looking to head higher. So that is why once I broke this, look for entry to the upside. So this is a similar thing I said for Disney, going back to Disney as well. Once we've bounced off the long-term trend line, and here our counter trend line is this we are touching here. Once we like to break this counter trend line or even this green zone, it looks like we have finally bottomed, looking for the upside.